Hi, and welcome back to Symax Fintech. This is part three where we sort of just briefly go over the macro outlook. And of course, how can we not start with sort of the geopolitical issues that there are at the moment? Israel. They've agreed to this 4-hour pause daily, but they've encircled Gaza City and they're closing in and in on that. There's still lots and lots of activity in Gaza. There must be so many phone calls going on in the background to prevent this from sort of the Middle East from just getting too deeply involved with other countries such as Iran and that. Of course, we're seeing some other militant factors from other countries involved. And of course, the Israelis and even the US are sort of reacting to that in a military fashion. And then, of course, you've got to think about what's going on with Ukraine and Russia. We shouldn't forget what's going on with Ukraine. With that, again, it's sort of winter's approaching now. So there's so many different things that could happen there. Is it time to put a stop to this? Is there any mutual ground where it can be stopped? Or is it going to go into effectively a pause or a freeze, you could say, with winter approaching? Now, oil had a bit of a funny week. It ended lower. WTI had a sell-off. It had a little bounce on Friday, though. Gold had a strange week again, sort of coming back from 2000 all the way back down at one stage below, I think it was 1940 it got to. Now, stocks had another good week. So techs were up, sort of especially the tech titan stocks. And the S&P hit a 7-week high. Microsoft hit a record price as well. The dollar strengthened a bit. So, there's still just so much uncertainty being created about the sort of the geopolitical issues that are going on around the world. Inflation wise, data is still showing that inflation is slowly reducing, but those geopolitical risks do bring that back into play at times. Okay, we've seen oil prices come down, sort of back down below 75, although it climbed to 77 on Friday for WTI. Now, so will we see that reflected in sort of petrol prices, food prices? But of course, there's so many elements, and I'll cover them in sort of a bit more detail regarding, what we could see there with inflation. And I suppose when we first look at it, China's actually in deflation. It's got falling demand sort of domestically, but also internationally, and of course that's a concern. So this week we've got the US-China meeting between the two presidents there, and personally I think China needs a deal more than the US. So that's going to be interesting to see sort of if they can come up with that mutual ground. There's so many things in the way of competition, and especially when it comes to tech with what's going on there, to whether there can be that mutual ground. Interest rates, we're still seeing, so the UK economy flatlining. Bank of England is likely to be a hold again at their December meeting. As many central banks as possible really are sort of trying to pause. It's just a matter of whatever is going on within the economy. Now, Powell last week warned rates may have to rise again. Now, of course, it's likely depends perhaps more sort of what happens geopolitically than it does economically, although obviously they hand in hand there. But if there is sort of any disruption all of a sudden to supplies, as we saw after COVID, that could impact inflation and start to give it a push higher again. But when we look at interest rates, as I keep saying week on week, and I have pretty much all this year, that I still expect them to stay high. And for me personally, I still believe it's going to be at least the middle of 2024 before there's any slight chance of them coming down. Again, you've got to look at different countries, different regions, almost different economies at the moment. But for me, those supply chains are still a concern if anything sort of starts to sort of escalate in the Middle East. Also, sort of the Panama Canal. For me, something I was reading there is that the water levels are really low, and it's making it really difficult for some ships to navigate. Now, if that continues, obviously partly because of this record summer that we've had, but heat-wise, that it could impact supplies for energy, consumer goods, and even food. So again, that's something just to keep an eye on. Now, as I mentioned a little bit earlier, with winter approaching, what's going to happen between Ukraine and Russia? Will it go on hold? Will they actually get around the table and try and find a solution? Or will there be an escalation in the war? So when we look at the US, we've got that funding deadline nearing again. We've seen what a crazy political situation this continues to come. I just find it embarrassing for the US, that the #1 economy in the world cannot come up with an economic political solution that removes this happening on a regular basis. Whether it's the budget or whether it's the debt ceiling, why can't they just come up with a mathematical calculation and then negotiate any changes to that if they happen to be on the upside? And at least that way they can keep the country open and just argue about the smaller things. As I say, I just find it embarrassing for them. Okay, so we've got the COP28 early next month. So again, sort of looking at what's going on. I just mentioned record heat waves this year, temperatures, etc. And of course, that does have an impact. It impacts crops, impacts us in lots and lots of different areas of our life. And as I mentioned earlier, when the water drops down to very low levels, it can make shipping very difficult indeed. We all want these carbon neutral conditions, but are we ever really going to achieve them? All these meetings are great, but words are cheap. Of course, when you look at the cost of becoming carbon neutral, and the question then comes, who's going to pay for it? But the longer you leave it, the more expensive it becomes, especially when you see inflation creeping. So it's just going to be difficult. As I say, they mean well, but I just think it's beyond them at the moment, or anybody to that extent. And it's got to be one of those things that's a concerted effort around the globe. You can't have some do it and some not to get any benefit. That's my personal view anyway. Okay, when we look at where the next crisis could come from, personally for me, I think it could come from these debt levels, on a personal level, corporate level, and even government levels. When you look at the size of these, debt to GDP is astronomical in some countries, including the US. So, where is that next crisis coming from? With these higher rates, and the fact that they're going to stay there for longer, and of course, the impact still hasn't completely filtered into the economies, so it hasn't really sort of had that real last hikes impact in the economy. That could take into early 2024 before we see that. Which again, when you look at disposable income, the arguments for bigger salaries now is slowly disappearing because inflation's dropping down. So it makes it much harder to argue that that workers demand those higher salaries. But of course, a lot of those job offers are reducing down as well. And if you've got the job offers reducing, it's going to make people more reluctant to move. So, sometimes, okay, I might be earning a little bit less, but I feel more secure where I am. If you move, if it's first in, last in, first out type scenario, then you're in the danger of ending up with actually out any employment. But I've been saying all year that you're going to see all these job offers slowly dwindling down, although I must admit they haven't been going down as fast as I expected. The jobless numbers increasing. Now, so far everything's held up really well. Will that continue into 2024? That's going to be the big question. So, on one side looking at debt levels, on the other side looking at unemployment. They're probably two of the key things that I'm going to focus on in 2024 for some of my trading decisions. So anyway, I hope this has helped you just build that little bit of a picture. And now I'm going to go on to do some technical analysis. So we offer newsletters, we offer workshops, 1-week courses, our comprehensive masterclass that's really going to help you. Apart from gaining all that fundamental knowledge, you get to spend 20 trading sessions with me, practical sessions. So that's I'm not saying I'm going to turn you into a massive trader in 20 sessions, but getting that sort of feedback from me, that insight from me, is valuable. Now, other things that we offer are trader mentoring. We consult to companies on FX and commodity exposure. Of course, we provide a massive educational content to individuals, exchanges and brokers. If you feel underfunded, why not give the trading challenge a go and see if you can get that funded account. Maybe you're underfunded, maybe you don't want to risk your capital, which is quite understandable. And of course, one of our courses now includes a free attempt at the trading challenge. If you would like to find out more about anything, then contact us at info@symaxfintech.com or directly to me at chris.tubby@symax-int.com. Okay, so now we're going to go into the technical analysis section. So I hope you join us for part 4. As usual, we start with our disclaimer. So trading involves the potential risk of loss of capital. It's not suitable for everyone, although hopefully it is for you. When it comes to leverage, just be careful because you can lose substantially more than that initial investment. Everything we include in here is just purely for educational purposes. We're not trying to provide you with advice. We're just trying to help you prepare, understand the markets better, to help you make better decisions. But of course, if you are looking to invest or trade, that has to be your decision. And before you make that, you should consider your financial situation, your level of experience and your risk appetite. And of course, on your risk capital, you're prepared, but more importantly, can afford to lose. If you've got any doubts whatsoever, seek independent financial advice before risking your capital.